Okay, hello everyone, and welcome to this live intraday strategy session on SB Trade Desk. Today is Wednesday, June 3rd. ECB day is here, guys. Mario Draghi is taking the stage right now. We'll keep you updated of any comments that are coming out from his end. Obviously, we'll be watching the euro crosses as we get into this, guys, and want to take a minute to go over the setups yesterday, but I'll be kind of jumping back and forth today as we go through these comments and see what kind of reaction that we're getting. A quick look at what the market's doing as we head into that. Obviously, dollar index, guys, very clean yesterday, coming right into that support region that we've been watching, 11,898, 11,880. Keep in mind you have the 100-day moving average, which is also in that zone. You have the highs that you made for the May opening range and the 50% retracement of that April-May stretch. So a nice little area of support. You'd expect to see some resistance back up at 11,960. And again, we'd like to continue to favor the short side on some of those dollar crosses if we do make it into that region. So look at momentum. I noted this yesterday as well on the radar charts. You know, this is the first time that we've seen, guys, a real strong hold in momentum right at 60 from oversold territory, from sub 40 territory. So certainly something that we want to pay attention to as we look at the dollar index from a standpoint of momentum, right? So some comments coming out from Draghi here says implementation of QE is proceeding well. Draghi says QE to run until sustained adjustment in inflation. Let's take a quick look at the euro. This was the featured scalp yesterday on the home page. Here's what we look like on the daily before we get into the intraday. The resistance region that we were looking at is exactly where this thing topped out, just below that 112.18. I actually put a piece on this yesterday, guys, on Daily FX. If you saw, you know, the shift to the downside focus remains in play below that region. Near term, we're looking for that pullback to give us a long entry to get back on the long side of the euro. And a break above 112.18 would be a target of 113.12. So here's what the scalp looks like. So you ran right into the resistance target yesterday. Near term, you're looking for that 11.29 to give you a hold. That broke. So the risk is for a drop into 110.65. That's the bullish invalidation level, but it's also a level of which we'd like to start looking at possible long exposure. If we break below this near term, you're basically looking for that spill to take you back into that 109.90 level, lower median line parallel, and the opening range high for the week. All right, so the levels for the euro are very clear, whatever scenario plays out here today as we open up U.S. trade. The momentum signature obviously turned constructive yesterday from the start of the month, or excuse me, the start of the week. Well, you can actually say from the start of the month, we've continued to hold that 60 resistance from oversold territory, sub 40, and there's a nice break into above 70, and we haven't seen that in the euro since this breakout, which took us into the highs towards the start, actually, of May trade. All right, so we'll be looking for this pullback here. If you find support at 110.65 and you get a nice topside trigger, do keep in mind that we would want to see momentum hold 40. Okay, so a scenario for U.S. trade here, you get a drop in price into that support region. If it holds, you see a topside trigger. We'll be looking at the 5-minute chart. Might be a nice entry to get back on the long, targeting 111.30 again, and then right back into the highs. This region is going to be critical. So we're going to move this sort of targeted resistance down to here. And again, we'll be looking for that break above 112.18. Any questions on the euro setup? Here's the 5-minute chart looks like. Let's just take a look and see if there's any triggers that are panning out. The support trigger just gave out for this move here. Again, you're going to be trading against the U.S. opening range high. The trade that was really most favorable here was into Tokyo. About a couple of hours ahead of the London Open, you saw a stretch test the highs for New York and London yesterday. Okay, that failed, and then right after it failed, you had some divergence in price action making a higher high, the oscillator making a lower high, and then a trigger break. Okay, this one would have been tricky because you would have had to have your stop against the New York high, so you might have gotten faked out on that last run up, but we didn't even test it. So the trade would have been safe. Again, you're looking for about 33 pips per scalp on the downside. All right, so we'll be looking for stuff like this. Okay, right now as it is, price is sort of stalling out, right below 50. So again, if you get that trigger break to the upside, you look to buy pullbacks again. Be careful sub 112.18. Okay, this region is pretty big, so be careful on longs into this. This is really going to be the breakout zone that takes us into that 113 barrier, and again, the operative median line right off the lows. Real nice setup, guys. If you actually look at the slope of this advance and you take a sliding parallel to the lows that you made in April, resistance, support, as long as we hold this, which is 110.65, you look higher. Some more comments coming out of the ECB. Cuts economic growth forecast for 2017 to 2% from 2.1, a slight 0.1% decrease. Draghi sees inflation rates rising later in 2015, says inflation to remain low in coming months. Inflation bottomed out in the beginning of the year. So certainly the inflation picture here, he's suggesting, he says, to pick up even further in 2016, 2017. A little bit more of a constructive approach on inflation, despite the fact they're lowering their economic growth forecasts. So I'll keep you updated as those comments cross the wire. Again, it seems, and irrespective of what he says, guys, if we get a decent pullback into 110.65, that's going to be a buy zone. We're going to look for support. We'll look for long triggers. If he's super cheery throughout this session and he breaks right, and Euro breaks right through 112.18, we might not have a nice entry, but we'd look to buy pullbacks into 113.12. So that's the game plan for the Euro. Keeping in mind, you still have non-farm payrolls on tap. ADP obviously came out earlier today at 201. The expectation was 200. So certainly the as far as expectations for non-farm payrolls on Friday, those are held constant still. No change on that front. Markets are basically looking for a print of 227,000 jobs for the month of May. Unemployment widely expected to hold at 5.4%. All right, so that's the Euro. I'm going to be continuing to monitor these wires for you. And again, we'll want to get through this presser before we actually start to press any scalps looking for longs near 110.65. The next setup that we covered yesterday here was dollar CAD. And the dollar CAD actually, after a little bit of a quiet start on that initial run up for the month, we sat there for a while right around that 125 level, went right through all the targets. So if you remember, the night before, 125 was the bullish invalidation level. Obviously, dollar CAD's been on a major stretch. My man Jamie on his personal trading actually killed this one. So here's what we're looking at as far as dollar CAD. Not surprising to see near-term support at 23.80. We talked about this. This is basically the lows that you made, the low stretch for the opening range back in April. Not too far off the March lows and the close low that you made here in February. So certainly median line support comes right into that region as well. 100-day moving average. These confluences are the ones that we look for. These are the strongest plays, guys. So for dollar CAD, the bottom line is, while the broader upside is still in focus, momentum holds 60, and you're just getting a support bounce here off of a confluence. So as long as you hold that Monday high, you don't want to get too constructive on dollar CAD. In fact, heading into Friday, this might be another one that offers a really, really nice play. Let's look at the intraday charts here for dollar CAD. So before we do, the daily chart, the thing I just want you to focus on this heading into the end of the week is a momentum hold below 60. Okay, and if we hold the high day close for the month, which is going to be basically 25 so far. On the intraday, here's what we're looking at. The slope lines on this advance, guys, have been of the cleanest that we've been following so far. Okay, so if you take that operative slope that we were looking at on the daily chart and just make some median lines or slope lines, just copy those parallels to major highs and lows. This is the last one that we added here yesterday. Oh, this one, sorry. Off the lows from the 8th of last month. And if you extend that same parallel, same slope, you can see resistance, and you can see that it just caught the lows that we made this week. Okay? So, on yesterday's piece, we're basically looking for a move here to hold resistance so we can get back on the short side of the trade. So essentially the targets all got taken out with that break below 25. Your initial target was right here at 24.50. The last target was at 24, and then we fizzled out. If you guys remember, the soft target was actually at 23.50. This thing failed at 23.67. We introduced that slope line there. It gives a little bit more clarity. The break in overnight, the bearish invalidation level was right here at 24. Okay. Once that breaks, you're off the short side. You took a trigger break to the upside here, which suggested, again, you want to look higher. This is sort of where we want to find resistance now. Okay. And if we break through 25, I'll be no longer interested in really playing the short side for the dollar CAD as of now. We'll put that one on the table if we break through 25 in the open of U.S. trade. That's sort of a big region for me. Other than that, guys, it looks pretty good. I don't think this is going to be poised necessarily for a position. Remember, on Friday, again, you get double whammy here with, let me just make sure, CAD unemployment, right? So you get the NFP print and CAD unemployment on Friday. Those can offer sometimes some wicked moves because you get the reaction on both sides of the pair. A breach of 125.60, just as a disclaimer here, guys, which is the high day close for the year, targets 126.18, 126.17. You have a confluence there of the upper median line parallel, and that 7.6 for retracement. Let's see what the 5-minute chart looks like on dollar CAD. I'm sure this stretch here has kind of distorted things. Okay, so we're testing it. The New York high from yesterday comes in right at 125.10. It's exactly where that 1618 extension is, just ahead of that 125.03. Any questions on dollar CAD? Here's a near-term short trigger on the 5-minute chart I've been watching. And in fact, basic trendline resistance looks like it's also being broken here. It's the same one that you're looking here on the intraday. And one other thing, guys, I'm just going on the fly here. Bear with me 1 second. I do want to see if we've completed any meaningful retracement on this move. Okay, we're breaking through the 618. Yeah, and then, again, the 764 is going to come in right there. 25.16 or so. All right, looking at this, you're coming from oversold condition from 30, and if it breaks into 70 again, guys, you want to be completely drop off that short side bias near term. This thing could spike a lot higher, right into that 126.18. That might offer a better short. So just looking at price action near term, I'm going to be really interested to see on the 930, 1030 slash, whether we hold 25 or not. If it doesn't, look for that rally right back into 25.59. Remember, that's the high day close for the year, so it's going to be pretty big. For Friday in the double whammy dollar CAD, how will you wait and what will you look for to quickly jump in without whiplash? Great question, Eileen. For dollar CAD, if you're not positioned ahead of that read, you're going to have to play it by ear. I'd rather be in a dollar CAD position with a stop at break even and a position already sort of cleared out, maybe a third or quarter taken off, than jump in on the release, unless there is a clear divergence in the expectation and what prints. So Eileen, if dollar CAD, for example, you get the dollar stronger than expected NFPs, and then you get weaker than expected CAD data, that's sort of like a dream come true, right? On that type of play, you do get the run, but on a quick pullback, I'll just jump right in, right? If we're talking about just on a regular basis trading it, Eileen, it's difficult to jump in after the print on the print. What happens is the print will decide the direction, okay? And then we have to either wait for that pullback to take the scalp to the upside, or if it breaks a major key level, jump into the trade there against the lows of the session. So again, we're looking at price action. We're not going to be focused on what the data actually is. And this is how we trade 90% of all the releases, guys. We have our levels mapped out. We just want to be there when the release happens. From our standpoint, doesn't really even matter what the print is good or bad. The market is going to do what it's prepped to do from a technical standpoint. These are just catalysts for us. We just want to be there when the release comes out. to take advantage of the price action. But a lot of those moves, Eileen, actually the initial move that you see on the print is not the move the market's going to make, right? A lot of times you'll see a spike high or a spike low, run into a resistance level, then come right back, and the actual candle is negative, right, on the close. So the seconds after the release, guys, is not when you want to be trying to press new scalps, right? Either want to be heading into the release with a position, or let the position decide the direction, and then wait for your entries. We have to maintain discipline, okay? We can't get excited in the release and kind of just jump into the position. We need to know and have our levels mapped out. And again, risk management is everything, Eileen. So any scalps you guys take, period, throughout the course of the session or the week, the most important factor you should be taking into account, where's my stop if the trade goes wrong, right? And especially like a market like this, guys, where you get markets that run, 2% advance yesterday in the euro. That's the second largest advance we've seen since 2010, 5 years almost. So I'd much more be rather selling into resistance and buying into support than playing the breakout. All right, and that's where the best risk management and the best risk-reward ratio will come in. A quick side note here, more comments coming out of Draghi saying ECB will change rules on meetings with investors. It says ECB planning new rules on speaking engagements. ECB will change rules on meeting. Says situation around Courier QE comments was a mistake. ECB wants a Greek deal that's fair and helps growth. ECB wants a strong agreement. ECB wants Greece to stay in the Eurozone. All these comments just keep coming out, guys. It's all fluff. By the way, if you want to watch it, if you want to watch the release, I'm just kind of monitoring the wires here. Here's the link from the ECB's website to watch that live. We're moving into the Q&A session, which is typically the most telling session or the most telling part of the release. So we'll kind of just monitor that. But let's take a quick look at what the euro is doing. Okay, a whole lot of nothing. A whole lot of nothing. Again, guys, we didn't get anything new here today. And the whole thing still remains on whether Greece, will be able to make the payment, will be able to, lock in a deal. I don't pay attention to those headlines. I don't really want to know. I just want to know if the deal is reached or not. And as it stands, the euro is still constructive, irrespective. Okay? And even on a scenario where you see a spike, dollar CAD is just ripping. Okay, no news coming out from just scanning the headlines here, guys. Bear with me 1 second. Yeah, there's no news coming out. It's interesting that we're seeing dollar CAD. It seems like it's just Eileen says it's the dollar. Yeah, I wouldn't necessarily say the dollar because you're seeing the euro hold. If you look at some of these intraday charts here, dollar CAD's sort of the biggest outperformer that we're seeing. Aussie's pretty much unmoved. Kiwi's pretty much unmoved. It seems to be a CAD event here. See sterling CAD. Also some weakness there. All right. We'll continue to follow that one, but we're going to look for that 125 barrier, near-term resistance coming right up. All right, moving right along. Next on tap is the Kiwi Dollar, also a very nice setup. The operative play on the Kiwi is the rebound off of major key support that we were tracking for the last couple of days. So if you guys recall, Kiwi's been on the radar chart since the start of the week. This is a major long-term support. The basis of the slope line actually dates back to 2007. I think we went over this in the webinar yesterday. We're tracking near-term resistance, into 71.70, which is, again, going to be that low stretch that you made back in February. And you also have that median line coming right off of last month's, or actually this is the April highs, confluencing right on that region as well. Momentum did break the trigger, but you're still holding 40. And that's kind of where we left off on Kiwi Dollar. Still looking to buy pullbacks while above the 71 handle, 71.08 specifically, is a 2011 low. Looking for the constructive play there. I'm going to continue to tail this here on dollar CAD. I'll leave this up on the side, and we'll see if this thing maxes out. You're getting some crazy divergence here. So if you do get a hold at that 25 handle, we'll look to see if we can get a trigger to the downside. But for Kiwi, here's what the daily looks like. Okay, the resistance that we were looking for right at that level did hold. You're getting the pullback now. Remember, 7108, this exact region that we were looking at earlier in the week, is still going to be the bullish invalidation level. So if the rebound is just, if that was the sort of end of the rebound, a downside break below this puts the short side right back into focus. Near term, we'll be looking for possible triggers here to the upside if we bottom out near that low at 71. Topside break, again, nice confluence here with the monthly pivot, the upper median line parallel, the close lows for March, nice region of resistance. So again, a lot of these plays, guys, I think we're going to hold these ranges until we head into non-farm payrolls, which is going to be obviously the bigger hitter for the week. Question here says, I have had stops jumped to over releases when already in a trade. One day I'll be better with them. That's the experience, I guess, to know when pulling back after release or the move will continue to go for it. Trading it is. Yeah, I hear what you're saying. Event trading, guys, is a class on its own. I don't really want to encourage that if you're newer to the strategy. If you've been doing this for a while with me, there is opportunity, but nimble is the name of the game, okay? And it's very important to be mindful when you're looking at these positions, guys. Is it the spread that's blowing out, or is it the market that's actually moving? A lot of times you'll be looking at the chart, you see a huge jump to the upside, but it's really the spread is just blowing out 10 or 15 pips. Also, your trade position size should be a little smaller as well. You're operating in a volatile market. A side note here, guys, the objective of near-term trading, a lot of people have misconceptions on what our basis objective is. It's not to make quick money or to whatever misconceptions people may have. It's to minimize the amount of time exposure in the market. That's our purpose. That's our biggest strength, and that's our biggest push for near-term trading. We want to minimize the risk that we are actually in the market. And the best way to do that is to take these small positions, small stops, near-term targets, and again, it ends up being a position that doesn't leave you vulnerable to larger, broader market fluctuations, event risk, unforeseen events, right? So just a side note there, sorry to digress a little bit, but when it comes to event trading, that's something you need to be a little bit more tailored to, okay? Because yes, it's a very volatile time. It's not an easy time to trade, but there's tons of opportunity if you have your levels mapped out and kind of have a game plan to go with. So again, we'll go over tomorrow, guys, all the levels right ahead of non-farm payrolls to see where the market's sort of positioned, and then we'll see how the fireworks play out on Friday. Here's the near-term chart for Kiwi Dollar. It's actually still exceptionally clean. So here's what we were looking at yesterday. And again, guys, check out the scale charts because it gives you a better, broader view. I try to keep the scalp charts a little bit more zoomed in so you can focus on the levels, but the scale chart will always give you a little bit more reference on where you are. Pretty clean play, right? Pretty clean play. The broader trade still, we're looking for that hold at 71, but near-term resistance at 71.90 held. The trigger that we've been looking at since last week finally gave out, and that took us with a break below 71.50. You're now looking for that support at 71.08 to hold. And again, that's the 2011 lows. So momentum doesn't look too encouraging here as you head below 40 ahead of the open of U.S. trade. We'll have to see if this thing holds or not, but we haven't had any positions on this since the run into 71.90. Here's what the intraday looks like. Yep. Yeah, dollar CAD still struggling sub 124, or 125 rather. We'll leave that one on the side there. I kind of want to track that. But the Kiwi Dollar looks like this. Okay, so again, the same trigger that we were looking at as far as that week-long trigger, Okay, that trigger break with the move below 71.50 right here was also accompanied by a near-term trigger break just off the lows from the London or Tokyo Asia highs, lows rather. Excuse me. Here's the Tokyo Open or the Sydney Open, Tokyo Open. Low in price came in right here. Trigger break came right before the move, but once you see that opening range low gives out, this is a trade, for example, Eileen, where you've been watching this trigger, it has multiple touches, it's a longer term trigger. On something like this, a little bit more comfortable to try to sell the break, but even then, it's a tight trade. So you're looking at 24 pips as a quarter of daily ATR. That's been sort of a loose target for me, guys. Sometimes you want to be a little bit more prudent as you're heading into these regions, but we did close out a 37 pipper earlier in the week, so it's not. We don't want to be too adherent to this because the market is in sort of breakout mode, right? So if we just stick to that too tightly, a lot of times you'll miss some opportunities. So. Comment here saying, very cool. Thanks for the extra discussion with that. And yes, I like the scale charts. All right. Cheers. I appreciate that. It gives you some reference, right? You don't want to be too zoomed in. All right. So we will see if this long trigger heading into U.S. trade. There's a couple of triggers here I want to look at. I'm going to get rid of this. This one's off the high from London. This one's off the high from Sydney. Again, we'll look to see if this thing holds support heading into the U.S. session. Some more comments coming out of Draghi saying markets must get used to periods of higher volatility, saying we should get used to higher volatility. ECB is unanimous on looking through stock market trends. ECB is unanimous it should keep steady policy stance. And Draghi says, if anything, ECB will actually add to the policy stance. And euro dollar. I mean, this is the exact kind of stuff that we're talking about. If he's saying we're going to add to the policy stance, guys, that's more easing, that's more QE, that's euro liquidation or dilution, right, rather. And the euro sees a nice drop and a pop. Classic. That was the 110.95 level. I'm actually looking for long triggers off this region right here. Oh. 1065. Okay, we'll see if that turns out to be, sorry about that. We'll see if that turns out to be the low. Don't have much of a trigger. The trigger here is going to be 60 break, okay? Because the high that you made in price in London in momentum is equal to the high that you made in momentum at the start of New York. So we're going to use 60 here. Watch that topside break, which shift the focus back to the upside. You really need to get through the 112 handle, guys, to get any type of real long side conviction. But we are looking to maintain constructive approach above that near term on the euro. Draghi says Greek talks are in a state of flux. This is where things might get interesting. If anything, we will do more to add to policy stance. Yada, 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 more comments. Okay, keep you updated on that. Again, we'll let this range set out. We'll see if we can get that pull into 110.65 at the open of US. So those are the three scalps that we've been following on, or the highlighted scalps on the intraday page. If you guys checked out the gold chart, just a quick note on that. It's going to be chop central until NFPs most likely, guys. And the bottom line is where gold is trading right now is the same range that we've been holding for the last 2 months. So no change to any of the levels. You essentially need a break below 1183 on a closed basis to get this thing going back on the short side. Broader short side focus remains in play below 1206. In fact, that massive swing that we saw back on Monday here, where did it find resistance? Right in that highlighted zone that we've been looking at since last week. Upper median line parallel, former median line parallel support, and a basic 50% retracement of the range, all lined up right in that region just below 1206 into 1200. So the levels are very clear, but as far as the directional bias, you have nothing from momentum, slight negative bias sub 50 here, but we'll look for this range. And to start off the month, this is actually what you like to see in gold because it's going to give us the cleanest opening range play. Okay, so to start off the month, the opening range high comes in just at resistance. Opening range low comes in just ahead of support. So we'll look to see that break to give us the directional bias heading into the end of June trade. So quick note there on gold. On the radar charts, just want to go over the dollar index specifically. Very, very clean. We finally, like I said earlier in the session, made it into that 11,898, 11,880 level. On a scalp basis, here's what it looks like. We looked at the daily earlier. Here's what the scalp chart looks like for the dollar index. So last night we noted that key support bounce that we're looking at, a resistance. We're still looking for a resistance hold around 11,960. So despite the advance that you might see here, guys, on dollar CAD, which again we're still tracking, the dollar index does look for resistance around 11,960. And again, as long as that holds as resistance, you'd want to be cautious about trying to get long with the greenback. Our downside broader bias still remains in play. In fact, on this bounce, first 40 break you saw since 2 weeks, or about a week and a half, okay? And obviously, that saw a nice downside stretch. First 60 hold that we're seeing since. And again, adds the conviction for a change in behavior for the momentum profile. Obviously, from an objective standpoint, the weekly opening range gave out here as well yesterday. So objectively, irrespective of any other strategy, if you're just looking at the opening range, you maintain a short bias below 11,980. We'll cease looking for long exposure if we do, or for short exposure if we do make it through 960. I kind of want to sit on the sidelines if we make it beyond that, but still looking lower here on the greenback. All right, and there's that support bounce. Another trade where just drawing basic parallels has been extremely helpful. So if you take the low stretch here, just on the 3 reference points we made on the advance off the May lows, mirror that to that same high. You can see a nice pivot there. You can see a nice pivot here. Resistance, resistance, break, now support. Same slope extended to the highs that you made towards the end of May there. Really clean touches, super clean touches. Okay, so we'll be looking again for that downside break of this key region, which is highlighting the 11,898, 11,880 zone yet again. Okay, so this is the downside break that would give us sort of the conviction to favor, continuing favor, the dollar lower. Also, a quick note, just looking at this right now, going off the cuff, we just want to see what this retracement looks like. See if we've made any meaningful confluences. Another 8-pip stretch we're taking to the 50. All right. Kind of just leave that for now. And there's the Euro move. I should have had this one on screen. There's the Euro move right now. Okay. Looks like we're pushing through the opening range, initial opening range high for London comes in right here. So watch that 1168. Watch this for a break right here. All right. Again, U.S. session hasn't even opened yet, guys. So we will have another opportunity to get in this if we do get the U.S. session pullback. Again, look for those highs just from the last swing highs you had here in price, somewhere around 1135, 1140. Maybe a nice move. Look at that hold in momentum. Again, a signal and change in the near-term momentum profile. You break back above 40, hold. Here's your first 60 break. So we'll see if we can get this pullback here. Again, I really like to wait until the 9:30 hour actually slots, so we will see if we can get that pullback to get that entrance. Closer to 1065 would be the best. Okay. The other, what was it? The other radar chart from yesterday was Aussie Dollar. Again, near-term resistance was in view. Whoops. Right around 79.18. You had a nice little hold there with the 100-day moving average as well. Here's what the Aussie dollar looks like on the daily first. Okay, so that did hold as resistance in overnight trade. And momentum still holding below 50. So here's what the scalp looks like on this. Actually, it's still super clean as far as the slope lines are concerned. Here's the same setup that you're looking at for yesterday's radar chart. There was the high. It actually turned out to be the high on some divergence that we noted. So the pullback here, finding some support at 77.60, that soft target that we were looking at. More interested in a possible buy if you get down here towards the end of US trade, 77.30. Topside break back above the 78 handle. You're looking for 78.60 and 79.30. A trade, again, where the ranges that you're looking to play are much larger than the quarter ATR. So keep that in mind, guys. I still do want to do something around 25, 30 pips, whether it's take a quarter of the trade or bring your stops to break even. Either way you play it. But in general, still looking for a hold as you head into that 77.30 zone, which is the basic 236 off the high. Not bad, and especially if you see a momentum hold at 40 here, that would be sort of a nice scenario for a spike lower in U.S. trade, and you look to buy that as long as you hold above 77.30. So let's highlight that region near term. I'll leave that there. Might offer some help as well. The broader trade for the Aussie still looking for confirmation that we're going to be more constructive, heading for 78.80, which is going to be the median line off the low, guys, just to put a broader picture in mind. Yesterday's range, again, massive range in price, trade holding just above 40 in momentum. Everyone who's been calling for the RBA to do more as far as interest rate cuts, if you take a look at the Credit Suisse overnight swaps, just a recent change since the RBA, still market participants are factoring in a 25 basis point cut next month. Now again, this changes. It was at 75% last month at some point before the RBA, so we don't want to put too much emphasis on it. But everyone who's looking for the short Aussie story on the premise of more RBA easing, it's a timing thing. This thing could easily head right back into 79 well before it turns over again. So keep your focus on price, and we'll see. Try to ignore some of that noise that we're getting on expectations for more easing. All right. Those are the featured setups that I wanted to cover here as far as the intraday page is concerned for the radar charts. Keep in mind the EuroCAD setup that we were talking about the previous day still is in view. Haven't really taken any positions on that specific setup, but to show you real quick where that is, here it is. We're still looking for a break above 39.30, 39.11. And if you remember, that's a nice confluence region of a 618 extension and a 618 longer term retracement. Here's what the Euro CAD looks like. And I'm just cautious on this, CAD weakness that we're seeing. Let me just snap this level for you. Okay. So the 618 extension right off the low, a 618 retracement right off the high. It is the exact high that we ran into the previous day here. Okay, this region right here, 39.30, 39.11, still the same region of resistance that we're looking to see that hold. If this breaks out, there's really not much in the way of targets, until you get into with a 141 barrier. 141.75 would be a 786. If we zoom back in price, again, this longer dated median line that we broke above really puts a breakout type of play into focus. I would be looking just at this region here into 140.75, which is the swing lows. Where is it? But essentially, key threshold, you'd be looking for somewhere in the range of a 141.70 pop here. Here's what EuroCAD looks like on the daily. Okay, 200-day moving average just higher at 139.56. But you're testing resistance now. Momentum's above 60. You know, today's close is going to be paramount. The only concern is that you've posted already a 1, 2, 3, 4, 5, 6, 7-day rally consecutive. Let's see the last time that we saw that type of development. More comments coming out of the ECB. Draghi says Governing Council has not discussed a QE exit plan. Says ECB currently sees no reason to add to the QE program. Do you see how he's playing both sides? This guy's a genius. Says that we haven't discussed canceling, and at the same time we haven't discussed adding to it. Fluff. Padding markets on both sides trying to play it, but it looks pretty good here. So the last time we saw consecutive 6-day rally was right here. And that was right before the trade fizzled out. And then we are at resistance. We are at a major key confluence of Fibonacci levels. The 200-day moving average is a little bit higher. So little cautious on trying to take new exposure on the long side from here. But I just wanted to highlight that major key resistance because we were watching that on Tuesday, and it didn't take very long for the market to kind of just break right through the bullish invalidation level is 36.40, but key resistance at 137.57, 137.56 here was the real play for EuroCAD. Okay, I also want to add that 40.50 target we had on the daily chart. 40.50. And Tuttle saying dollar CAD's coming off the 125 level. Is it? Let's see if we can get that. Euro's still running. Yeah. Okay. Divergence into the trigger break. 30 pips off already. Let's get the show rolling here. Okay. Draghi still taking questions, says Greek economy is viable if right policies are implemented. Market risks addressed by the macro prudential policies, says ECB sees no signs of bubble risks. Yeah, they said the same thing during the crisis. But yeah, Tuttle, I'm going to wait on this one. I think you get another stretch higher before as you head into the U.S. trade session here. You got about 15, 20 minutes before equity cash markets come online. I don't want to get jackknifed against that, but it does look pretty good, guys, if you get that trigger break to the downside for a move here in dollar CAD. Tuttle says, I'm short at 124.88. Where's your stop on that, Tuttle? Nice entry, actually. I wouldn't have any problems with that. Like to see it against, the ideal condition would be against the New York range from yesterday. I don't know if we get to move higher again. Tuttle on the short side of the trade as far as your targets for that. Remember, we just added these levels to the dollar CAD on the near term. Let me clean these up. Looks like that 764 is the last one I want to leave on there. And again, that same region that we were looking for, 124.70. If we break below this, you're basically looking right back at the 124 handle, Tuttle. It actually looks pretty good. Nice initial reaction to it. The only concern is the break above 60 in momentum. So watch the U.S. Open. If you break through the highs, 25.15. Remember, 25.10 is what we looked at on that 5-minute chart. You're probably going to see this thing back in 25.60 again. So keep a tight stop on that one, but I like it. I like it. It's just too steep in advance to even put a trigger on the 30, so we'll stick with the near-term price action on this one. Hey, you're more than welcome, Tuttle. Nice trade. Guys, if you have any other questions or trade setups, please feel free to throw them out. I did see Andy here. Sorry, I missed your question earlier. Andy says, dollar-yen is at the upper parallel resistance. Here's what dollar-yen looks like. So we were tracking this one last week, and you're absolutely right. This is a nice basic drill as well. This is not even a pitchfork. This is just using the lines off the low. Extended off that swing low from November. You saw a nice pivot there. Extended off of the January 2015 opening range high. And that comes in right into this region that we were looking at, 24.35 into 24.13. I have a constructive outlook on this, and as long as momentum is up in this region, I really can't try to press the short. Even if we're trying to press a dollar short, I'm not sure the yen is going to be the best one where you're going to get the best squeeze for your buck, guys, which is kind of why I took it off of the intraday charts this week. The broader upside is major focus. Obviously, we've broken some key levels here on this stretch, specifically above that 2180 level, which was basically the stretch highs for last year and this year ahead of this break. So I'd rather much be using dollar yen for dollar strength on a dollar strength story. Does that make sense, Andy? If it sets back, sure. Look to get back on the long side. Playing the setback, I'd need a way more conviction than just being at parallel resistance. Here's what the near-term chart looks like from the scalp from last week. Could be a near-term topping process, but even if it is, the pullbacks have been so extremely shallow, I'd rather be using those to get back on the long side. So it's playing through the levels rather well. The opening range low is still in focus, and you basically have a nice, clear weekly opening range to play. I really wouldn't look to do anything else beyond that on this. You're looking for either a clear definitive break above 125 or that 123.80 level gives out, and you play this short below the weekly opening range. Even if that breaks, you're looking at a 50 pip rebound just for a 38.2. So I'd rather be looking for entries back on the long side with a pullback. Does that make sense? Andy says I would rather play the CAD. Yeah, I mean, I don't blame you. Dollar yen is typically my most loathed currency. But I think the dollar CAD setup's a little bit clearer on this one. Also, guys, the euro crosses in general have been very fruitful. If you look at euro Aus, it's probably not the best indicator because the euro and the Aus have both been rallying. But I just wanted to point out, yesterday we were looking at this, right in the room, and it was kind of rallying. We saw that 144.80 or 144.48 level is what we wanted to see break to get the conviction on this breakout. We tagged right into it and closed lower on the session. So momentum still sub 60, another breakout potential trade I do think may have massive upside potential if we finally make this break to the upside. So it may not be poised per se for a setup. This is sort of more of a swing type of trade that you'd want to look for entries somewhere around this region, okay, for a target somewhere around here. But in general, I'm looking for either a reaction with a break above 144.50 or the initial opening range low if it breaks for the month. Look for entry here again. We're down near 40.90, the 141 handle. So lots of potential, lots of nice levels that we're coming into in some of these crosses. And with what the euro is doing, we might want to shift our attention to some of the more exotic euro crosses than just euro dollar. Here's what euro Aussie looks like on the 30-minute. Okay. Pretty much a pretty clean opening range for the week. So you set a Sunday low, or this is the Monday low here in New York. You press the high, it fails. You try to press the low. Did get a pretty deep drop in momentum, but more broadly speaking, you basically held the opening range low. Failure at the highs yet again puts this range into focus just below 144.50, which is the level we talked about. So I do like the upside of the trade. A trigger just gave out right here. Again, guys, nice moves. Nice moves. And if you're holding long exposure, this is when you'd want to start getting a little concerned if this trigger here gives out. Okay, but another trade, massive potential. The broader upside focus remains in play above the opening range low, but essentially above the median line parallel here. So as long as this region stays well supported, we'll continue to favor the long side in Euro Aus. Key resistance break that we're looking for is 144.50. All right, any questions on Euro Aus? Tuttle says booked a quarter at 20 pips and stopped to break even on the CAD. Thanks again for your advice. Hey, more than welcome, Tuttle. Nice entry on that one. Nice entry on that one. Draghi says assesses Greek collateral based on market development. Says the ECB is not taking political stance on Greece. It says the ECB will not join Brussels meeting in Greece today. All right. I'm going to stop reporting these headlines, guys, because it's actually just all fluff. There's no substance to anything that we've heard today, per se, to change our mind. Yeah, Tuttle, that's how you want to play. And this is why I get a little bit cautious when we get excited here on the opening, on the open of the market, because, again, you still haven't gotten the actual trigger to get the short into play. So as that trigger slope increases in slope to the upside, that will start to funnel into a nice play if you get into the break of the U.S. opening range. So still interested. See that 25 barrier hold as resistance, but you're in the right scenario here with a stop at break even already. Was the steeper short-term trigger a good entry? You talking about this, Tuttle? Is that what you're looking at? He says yes. I try not to play him so tight. I'm just trying to give you an honest answer here. I try not to play him so tight. Listen, if you get too granular, guys, I mean, I could find any two reference points and can be pretty compelling, look like a break, right? But remember, you're looking at a trade that has a broader upside bias. So whenever you're looking for triggers against that, you want those to be a little bit more significant. So I'm more inclined to use session lows. This is your Asia Pac session low in momentum. I'm more inclined to use daily reversal levels, things of that nature, as reference points for where I want to take my triggers. If we get too arbitrary, or if we get too subjective with every two reference points, you're going to end up. Listen, there's merit to a strategy like that. I can tell you that I have seen guys on the desk who use super tight triggers, but they're looking to scalp for like 10, 15 pips on a maximum play. It's more likely if you take their average gains somewhere between 7 and 12 pips. If that's the nature of the strategy that you're trying to work with, Tuttle, on a real short term, yeah, you can do something like this, but your stop shouldn't be anywhere near 30 pips out or anything. With the same respect, when we're trying to intraday on a little bit more wider range, I'd be more inclined to wait for the broader triggers here to give out off the session lows and things like that. Does that make sense, Tuttle? Let me know if that makes sense or if it confuses you. He says, yes, this advice is very helpful. All right, right on, man. Good to see you in the room as always. All right, so if there are no other questions, I'm going to let you guys go here. Again, we'll be back on 8:30 tomorrow morning for a nice rounded update right ahead of the non-farm payroll print. Watch the dollar crosses as you head into tomorrow, not specifically today, but as you head into tomorrow, dollar crosses are likely to get a little sleepy here, maybe even some profit taking on some of the positions that we've seen earlier this week, but the non-farm payroll print should offer some nice volatility on that. As far as the index is concerned, again, we want to keep our eyes specifically on that 11,890, 11,880 region of support. And again, the bearish invalidation level stays steady right around 11,960. We'll stretch that out until 11,968 as well for the 50%. All right, so a nice little region here that would invalidate the short side bias that we just triggered yesterday on the greenback. All right. Guys, I appreciate all the comments. Thank you very much. Again, we'll be back tomorrow. Best of luck trading. Don't go anywhere and forget, you have also Jamie on tap today at 1 o'clock with the midweek strategy webinar and some of the beautiful charts he's got on the longer-term chart pages, guys, and the pending trades that are currently in play. Don't forget that breakdown from him later today at 1 p.m. Eastern. All right, guys, I'll see you tomorrow. Cheers.